Like I told you in the last couple of videos, we have so many bullish setups on the horizon. The last couple of videos, I gave you AMD, SOXL, I gave you IWM, which is the Russell 2000 ETF, and I gave you Amazon. All four of those had similar patterns. All four of those have popped off since the last couple of videos. Hopefully you guys watched and took action. I also told you I was selling cash secured puts on Tesla. Here they are, up 53% after the spat between Elon Musk and Donald Trump. But now I think that spat is over. I think the news is behind us, and it is one of my top stocks and opportunities for June of 2025. So here it is, the best stocks to buy for June 2025, the best stocks to watch for June 2025. I'm giving you my list, and you can also learn how it is that I look at this stuff so that you can find opportunities for yourself as well. Now, I want you guys to take a look at Tesla here. So we dropped 14%. This obviously was peak fear. Now, I got a lot of questions about Tesla, whether there will be a sell the news event for Tesla on June 12th, which is when they are going to start rolling out the Robotaxi event. Now, we got some breaking news just as I was recording this video. Apparently, the first Robotaxi in Austin is already driving on the street. Here it is in black, driverless. And you can see the Robotaxi logo on the side. That's kind of cool right there. But here's something that's super important to know about the Robotaxi event. It is not a one-off event in the same way that the We Robot event that popped off in LA a few months ago was. From Grok, it says here, the Robotaxi service launch in Austin on June 12th is described as the start of an ongoing ride-hailing service rather than a one-day event. Sources indicate it involves deploying a small fleet of about 10 Model Y vehicles for autonomous ride-hailing in geofenced areas, with operations beginning on that date and continuing thereafter. Unlike a single day event like a product unveiling, e.g. the We Robot event, this is a service rollout with plans for gradual expansion to the public by late June or early July. This is actually great news for price action. Why? Because we know that when we have a one-day event, on those one-day events, we tend to see a sell the news effect. However, not only did we front load the sell the news effect with that Trump and Elon spat that dropped us 14%, but if it is an extended rollout that is going to gradually flow into July, that really helps the stock price, because if the gradual rollout progressively gets better, they're going to start off with 10 Model Ys, it's going to be geofenced, then it will likely expand to the rest of Austin with more and more cars. That will give the stock price a chance to grow. Now, we may see a small sell the news event on the day that it rolls out, but if it's not a singular event and it's going to happen over a month, the stock is not going to tank over a month, obviously, unless a pedestrian is unalived or something. Now, if you look at the chart, we have a power of three: consolidation, manipulation with that 40% drop into that 0.618 level, and potentially an expansion to this volume imbalance, this gap that you see here at 400, which is a psychological level. We also have these equal highs at 368. We know that liquidity loves to get drawn to equal highs and lows, otherwise known as double tops or double bottoms. Now, remember when I was telling you guys about the fear candle and the narrative busting effect when we were talking about Google, and I gave you guys the shares in the 140s? Go back and watch that video from April. But I was saying that this fear candle here, this minus 7% drop that we got on May 7th on Google, was when that report came out by the Apple employee that Google searches are down on iOS. Now, that was peak fear, just like the Trump and Elon spat. What happened when we closed above that? The market already accepted that move was over. This is called that narrative was broken. This is called a narrative busting effect. If we take a look at the NASDAQ, same thing, right? You had the Liberation Day tariffs. What happened when we closed above that? We continued higher. This is busting the narrative that brought the peak fear. Think back to other narrative busting events like DeepSeek and NVIDIA. What happened when we closed above the DeepSeek candle? We continued to rally thereafter. Now, I'm not a fortune teller, but it seems like the situation between Trump and Elon has quelled, and they're likely not going to mention each other anymore. Obviously, I don't know that for a fact, but the fact that we closed above this, if we don't hear any more from that situation that caused peak fear, then that means the market put it behind it. Now, does it mean that we won't get a retracement down to fill this gap, for instance, before moving up? No, that's not what it means at all. And as a matter of fact, If you are bullish on this scenario, on this stock, on the rollout, on the future of Tesla, you want that situation to happen. You do want a retracement from here. That also makes call options cheaper if you were trying to play calls. And our portfolios just hit an all-time high yet again. If you want to trade live with me every day and you want to get all of my analysis in real time and you want to get all of my options plays when I swing trade options, click the link in the description below. I trade futures live every single morning and go over the top stocks that I'm looking at for the day for those of you that day trade options as well. If all you care about is long-term investments and you don't care to swing trade or day trade, there is a much more affordable option as well. Either way, both of those options are in the description below. Sign up. Would love to have you. Now, I got a question by a Twitter user that a lot of you guys are thinking about. Why is Robotaxi such a big deal if we already have Waymos, and Waymo has already completed millions of rides and is actually bigger than Lyft in some cities already? And obviously there is hype, but secondly, it's the scalability that a Tesla Robotaxi system can offer, which can, once it's released, can already put it ahead of Waymo. If you look here, Tesla produced 1.77 million vehicles in 2024. The ability to retrofit existing Tesla vehicles provides a massive potential fleet for Robotaxis. So not only do Waymo vehicles cost a lot, they use the Jaguar I-Pace, which is $70,000, not including all of the LiDAR equipment that it has to retrofit onto those Jaguars. But Waymos also have to be pre-mapped, and they are very specific to the area that they are driving in. They are geofenced and they are pre-mapped, meaning that if Waymo wants to open in a new locale, say in Memphis, they have to go to Memphis and they have to pre-map the entire area that a Waymo is going to drive in. Versus Tesla, which already has all of the data and relies on vision-only capabilities because of all of its cameras, it can, in real time, provide a robotaxi service without having to pre-map anything based on all of its driving data, as well as the sensors and cameras that are currently on the cars that are equipped with full self-driving. So although Waymo has already achieved level 4 autonomy, and right now Tesla's considered level 2, obviously, once this rolls out and it rolls out successfully and we see it in Austin, then we start seeing it in the rest of Texas, the rest of California, and it gets federal regulatory acceptance, then at that point, you automatically not only have a fleet of cheap cyber cabs, which cost around $22,000 to make, but every Tesla, in effect, will be on the Robotaxi network. That is the goal. So in terms of scalability, the reason that there's so much hype around this is because once it's rolled out, if it's successful, it automatically puts it ahead, or at least in a different category than a Waymo. Now, I'm not saying one is better than the other from a consumer standpoint, but both can exist in a world where Robotaxi is now the normal mode of transportation. It's just that Tesla already has way more cars on the road and can likely produce more cyber cabs efficiently than Google can produce Waymo cars. So in my opinion, when Tesla was trading at near 500, it wasn't even close to doing any of this stuff, right? If it shows and proves over the course of this month, I think that the market and money managers and institutions will see on the ground, will see the potential of Tesla, where at one point it seemed like a pie in the sky idea. And I do think it can get back, obviously barring any hiccups, it can get back to that range pretty easily, in my opinion. But let's cross that bridge when we get there. This right here is my target for now. All right, Amazon. I told you guys there was a massive opportunity here as Amazon was trading at 15 times cash flow. Historically, that is insanely low for Amazon. Right now, it's trading at 35 times cash flow, which is around where its 5-year average is. This was also one of the short-term setups that I gave you guys in my last couple of videos, showing the inverse head and shoulders here, breaking out of this downtrend, breaking out of it violently. Again, this is probably something where you want to wait on a retracement, but Amazon is likely getting back to the 242 mark here, breaking out of this pattern. What's interesting about Amazon is they are generating $650 billion of revenues a year. And most of that money comes from their delivery, their retail service. but their AWS is growing like crazy. So their cloud services program, they are also the top cloud provider. Second is Microsoft, third is Google. But AWS generates $26.3 billion in revenue, a 19% year over year increase. That was just in Q2. For the entire 2024, they generate $107 billion in revenue, also up 19% year over year. Now, experts think that as AI continues to grow, this will likely grow to a $500 billion a year business, which means that if you were just going to buy Amazon based on AWS and not what they're known for, the retail section, the delivery and retail sector, then you can justify buying Amazon here if they didn't do deliveries, in my opinion. And in the short term, like I said, I do think there is a path for it to get to 242 if a deal with China is passed. We already know that the US and China are in talks. I think they actually concluded talks today. But if a deal is passed, Amazon is one of those stocks that, in my opinion, will easily get back to all-time highs within the year. Another stock that will indirectly benefit from a deal with China is ASML. I gave you guys this stock a while ago. We bought it in the low 600s, currently closed the highest close since last year at 784. Also, similar pattern that I showed you guys with SOXL, with AMD, with IWM, and with Amazon, you could see here on ASML. If I pull back to the weekly chart, check out ASML's trend line going all the way back to 2008. It is a steady trend line, and ASML was trading at 1100 not that long ago. One thing to know about ASML is it is a monopoly in the space. One of the things that I look for when I invest in companies is this company a monopoly or near monopoly in its space? Like Uber, like Nvidia, ASML is a monopoly, not even a near monopoly, because there's nobody that can do photolithography the way that they do at scale. Every single semiconductor company is retrofitted for ASML's equipment and not another company that is trying to compete. And it will cost these semiconductor companies so much money in order to switch over to one of these new Chinese lithography companies. So if a deal with China is passed and there are restrictions lifted on the semiconductor space, specifically American semiconductors providing that AI drive to Chinese companies, as Jensen Huang said not that long ago, he would rather that the Chinese AI be built on an American stack rather than a Chinese stack. So if he can convince the government of that and they lift restrictions on semiconductors, on semiconductor businesses doing business in China, ASML will benefit, and I think this one gets back to $1,000 pretty easily, and obviously the semiconductor industry, which I'll talk about in a second. So SOXL, a stock that we bought at 7, currently trading at 22. Again, this similar breakout pattern. This, honestly, I've never seen the market be this easy in a very long time. Now, if you take a look at the regular ETF SOXX, because SOXL is just the leveraged version, either way, for a long-term investment, either one is fine. SOXL is going to be a little more volatile, but will also give you bigger gains on these huge run-ups. But you can see here the pattern that I laid out for you guys a while back. This is SOXX going all the way back to 2008. We stopped at the same exact level in this bear market for SOXX that we did in the bear market in 2022. It was at the golden pocket of the fib, sitting on this trend line. Now, again, I expect this is the semiconductor industry is going crazy now. And we don't even have a deal with China yet. Imagine when that deal comes. We are going to see all-time highs on SOXX, which will include Broadcom's rally, Nvidia's rally, AMD's rally, and Texas Instruments rally. Those are the top 4 holdings in SOXX. I am hoping for a pullback here to fill that gap between May 5th and May 6th. But honestly, I don't know if we get it before hitting all-time highs. Now, one of the things that could bring SOXX down is Broadcom. Broadcom, after earnings, we see a dip here after sweeping liquidity above all-time highs. Broadcom does semiconductor as well as software services for networking as well as for data centers. So they are not in the GPU space. Again, another monopoly in its space. I am hoping for a dip on Broadcom because this is a stock that I don't own, that I would actually hope to own, to be honest. And if it does see a dip, post earnings in the same way that we did post the earnings in December 2024 and in March 2025. If we do see a dip to fill some of these gaps, then that will give us another entry on SOXX, which I am hoping for. Now, another stock that you guys are probably sick of hearing me talk about is Google. Now, you're not sick of making money on it if you did what you were supposed to do, but there's a couple reasons that I like Google here. One, I do think that the search is dead narrative. That is another one of these thesis busting programs. Again, the search is dead narrative on May 7th was quickly closed above, and we are seeing a wave of buying volume on Google here. As a matter of fact, today, as of the time of this recording, June 10th was the second most volume that we saw in almost 2 months on Google. So not only is its forward PE 18, which is insane for a Mag 7 stock, its price to cash flow is 16. Do you know what the average is in the tech sector? Price to cash flow is 20 to 30. That is the average, or the sector median for the tech sector. So Google is cheap by any standards. And it is a money printing machine, printing almost $150 billion of cash every year. Even Google's own 5-year average for price to cash flow is 20 to 25. And even today, as of the time of this recording, Google and OpenAI announced a partnership, even though ChatGPT and Gemini are competing, but they announced a partnership for OpenAI to use Google for its computing requirements. Now, this I found a little weird because of OpenAI's relationship with Microsoft and Google Cloud obviously competing. Why would OpenAI go with Google as opposed to Microsoft? That is seen as something obviously that is bullish for Google. But obviously it has Waymo. Like I said, Waymo does more rides than Lyft in some cities. Search revenue is actually going up, not down. YouTube is valued just as much as Netflix right now. And YouTube is considered the second most used search engine. Now, the way that money managers and institutions work, when it's time to put money to work and they've missed the rally, they do flock to companies that produce a shit ton of cash. And for a company that is cheap compared to its cash flow, i.e. Google, 16 price to cash flow ratio. I'm of the belief that if the market continues up, Google will be a beneficiary of that. And I think that price will start testing that 200 range in this gap here. Now, as a bonus, I am potentially looking at United Healthcare for a starter position. I haven't started one yet, and I'm not sure if I'm going to do it. But the fact that United Healthcare is basing here, bringing in over $400 billion in revenue a year, currently trading at a 13 forward PE. I think we may be very close to a narrative busting program on UNH, although we're not there yet. And I have to look into this more, just putting it on your radar. Now, this week, as of the time of this recording, we do have a bunch of inflation data. We have CPI, PPI, and consumer sentiment on Friday as well. Now, I'm going to cover those events live on this channel. However, I don't know what they're going to be. Is it going to provide us a little bit of a pullback to fill these gaps that we have here between May 9th and May 12th? I have no idea. But if it does, then the stocks that I'm looking at right now will be in prime opportunity for options, for ads, for selling options, for dollar cost averaging. So if you want all of my buys, all of my options plays in real time, all of my analysis, I day trade every single morning as well. Join, link is in the description below. Would love to have you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.